Hi, great. Okay, we're back and off we go. Okay, so welcome everybody again. Lots of new names in here, so welcome. Today we're going to be talking about fundamental analysis. What fundamental analysis means with as regard to the forex market, and basically not all news is equal, as I've put on there. Some news is more equal than others, as I think George Orwell once said in a very famous book. But before we get going, usual announcement. If there's any problems with your internet or you can't hear me, say good afternoon, Adam. Nice, thank you for your kind comment. There's sometimes it's the GoToWebinar software, sometimes it's your local computer or internet device. So try restarting your device or the internet, and any things that I don't explain very clearly because sometimes I speak too quickly and I get too excited about things. Send an email to me at webinars@hotforex.com and I'll get back to you as soon as possible. Many people get confused about fundamental analysis and the news, and they make, unfortunately, too big an issue of it. Okay, hopefully I'll try and disseminate some of those ideas this afternoon, or today. So obviously, any questions, please ask. Somebody's saying the sound isn't good. Is everybody else okay? Everybody said okay when we started. Okay. Yeah, everybody's saying it fine. Okay, so it may be just to say the internet or your GoToWebinar software. So basically, let me just run through the disclaimer first very quickly. I will read this quickly. The material here is provided as a general marketing communication for information purposes and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation, or indeed a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in FX and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Okay, so that's the admin bit out of the way. So there's quite a few new names in here. There's a few I do recognise from previous webinars, but let me just outline who I am and why I'm sat here today and talking to you. My name is Stuart Cowell. I'm the market analyst here at Hot Forex. I worked in the City of London for retail banks and investment banks, and I ran my own little consultancy as well for well over 20 years. But more importantly for this role here, I've been trading and investing myself since, trading actively since September 1997, so 20 years this year. Started buying and selling stocks and shares when I had sufficient money to be able to do that, and it wasn't going to affect my paying my mortgage or affecting the kids or my wife or anything like that. And over the time of the last 20 years, sort of trading and investing, I've distilled my thoughts and ideas into four key things, and they are, and again, a lot of you will have heard this before, but I'm not going to apologise for repeating it because I think it's absolutely fundamental to success in trading. Do what's probable. If it seems probable, you bring your chart up, you see the news, you read the news, you hear you read something in the press, you hear something on Bloomberg. Does it seem probable? Is it quite likely to happen? Is it probable? If it is, do it. If it isn't, don't do it. Keep probability on your side. Also, don't overcomplicate things. If you're a technical analyst, don't try and have too many indicators. Don't believe that you can tweak all these different indicators, that some of them have been around for centuries, and that you'll find one that's perfect, that actually works 90% of the time. They don't. They're indicators. That's exactly what they are. The word indicator means it's an indication. Doesn't mean it's going to happen. It means it's an indication. So keep it simple. Don't try, and I'll talk about this today as well a lot, don't try and understand every single nuance of the news, every single piece of the news. It's too much. It'll drive you mad. So try and keep it as simple as possible. Keep it probable, keep it simple. Look at multiple time frames. If you're an intraday trader, trading off the 15-minute chart, you make sure you know what the 4-hour candle's doing or the 1-hour candle's doing. If you're a day trader trading at the end of day, make sure you know what the weekly chart's doing or the monthly chart's doing. Know your time frames. Sometimes look at the lower time frames as well, because obviously the faster time frames, they react more quickly than perhaps your trading time frame. So if you're trading off the 1 hour candle, make sure you have a look at the 15-minute candle, see what it's telling you what to do. I should have done that this morning. I don't know if any of you have seen a post I put up this morning, but I didn't do that this morning. Got stopped out, but on a gold trade. But anyway, on a 1 hour candle, I should have looked. If I'd looked at the 15-minute candle beforehand, I was in a rush and didn't, broke some of my own rules, and it didn't work. But that's trading for you. But by far the most important thing is to know yourself. What sort of person you are, what sort of trader you are. Are you a scalper? Do you like sitting in front of the screen for 2 or 3 hours at a time and taking lots and lots of trades very quickly and accepting 2 or 3 pips, 5 or 6 pips profit? Or are you the sort of guy that just wants to wait till the end of the day, look at what's happened in the day and look at the end of the daily candle? I can't tell you that. You've got to decide what sort of person you are and what sort of risk level you have, because if you can't accept losing, you'll never get off first base. This business is it's a business. Treat it like that. Have a trading plan, have a reason why you're trading. Respect the markets, respect yourself, respect your money. It's your money, it's your investment. You've worked hard for it, or wherever you've got it from. Look after it, protect the capital, have a plan, know yourself, and you can be successful at this business. Too many people fail because they risk too much, they expect to win straight away, and they don't know themselves. They try to be scalpers when in fact their personality isn't designed to be scalpers. So anyway, that's enough of my preachy start. So today we're going to be talking about fundamental news, or news in itself. So what is news? So what news and the fundamentals? Planning. The news is, data releases are planned. They're anticipated. You know what time they're going to come out. The economic calendars are there. And as I say, the premise of this webinar today is that not all news is equal. And even high impact events, there's some more high impact events and other high impact events. Some are higher than highs, and I have the 6 in order that I think, and it's generally recognised that these are the 6 most important high impact events. And stay focused, look at alternatives. Not all news does what you're expected to do sometimes. So any questions, ask them as we go through. If you want to leave it till the end, fine, leave it till the end. But before we press on, can I just get a feel for the type of traders that's in today, whether you're a scalper or a long-term trader, what sort of experience you've got, and also why you're here today. What do you want to get out of today? Okay, just if a few of you respond, that'd be good. So, have you traded news before and it's caught you out, or do you want to understand what the news means, or are you a long-term trader that's been traded news before and is quite successful and looking for some new ideas? So any feedback would be good. Okay, so someone who's at fundamental uses technicals to execute. That's good. Thank you, Adam. Anybody else? Swing trader, long-term, very little experience. I want to add my logic and fundamentals. Okay, logic and fundamentals, James. That's very interesting phrase. Hopefully I'll explain my thoughts on that later as well. Okay, yes, so there's lots of questions, comments coming in here about being caught out by the news. Few daily traders in here, intraday traders. It's what you call intraday traders. No, Ian, a day. When I say a daily trade, I mean somebody that trades on the daily candles. An intraday trader is an intraday. Somebody that closes their positions usually during the day, and obviously scalpers are guys trading on. They're in and out very, very quickly. Okay, scalper, technical analysis, try away from news. Absolutely, Malisi. So, Malisi, what are you trying to get out of today then? What do you want to get out of today if you're a scalper and you're aware of the news and you avoid the news? I'm sure you'll answer me in a minute. Okay, so let's, Malisi, I'm sure you'll answer me. So let's crack on. Let's not waste some time. So, it can drive you mad trading news. So where did it come from? What is fundamental analysis? Well, traditionally, fundamental analysis really originated in the stock markets, the equity markets, and you see it all the time. You see if you read the business pages, or you watch Bloomberg or CNBC, you'll see these analysts on the page talking about companies and company performance. So they will look at the books, basically look at the numbers. So they will analyze it, and they will apply sort of mathematics and accounting and logic to it. So they'll look at PE ratios, price earning ratios. They'll look at the future earnings of companies and where they're anticipated to go. They talk about the Nasdaq. They talk about the S&P now being a multiple of 17 or 18 of forward earnings. Well, what does that mean? Well, that's what fundamental analysis is all about. It means that the earnings, that the growth in the 500 companies on the S&P should increase by up to 17 times in the future. Is that too high? Well, some people say it is. So that's so stock markets may be too high, but that's what the fundamental analysis is all about. So they look at sales forecast, cash flow, cash burn. They look at the actual accounts for companies that actually produce the data, and they scroll through the numbers, and these analysts and economists and strategists, they will interpret the numbers quite differently sometimes. So that's why different banks will have different views on the same company. So one bank might expect Apple, for instance, let's use Apple, the world's biggest company, had a really good last few days. One bank might say they expect their share price over the next 6 months to go to X amount. Another bank will say another amount, and they use fundamental analysis to help them derive these numbers. They also look at things like the reputation and the quality of the man in charge, the CEO, his people around him, the board and the non-executive board, the management team. That's all fundamental analysis. As far as the forex market is concerned, it's really principally news. All that thing I've just talked about all those things about analysing the stock markets, it doesn't really come to bear on the forex market. And the forex market is really, when we're trading forex, it's the main key currencies, the main 8-7 currencies, and the news affects all these currencies in a different way, but also equally. So when we look at our calendar and see that X news announcement is going to affect this particular currency, the other thing to always bear in mind when you're trading currencies is it might affect that currency, but will have an impact on other currencies as well. And then it's never an isolated impact, because currencies, you never trade them on their own. As we know, they're traded in pairs. So if a news announcement comes out and it's really positive for one currency, it might be really negative for another currency. So that's the sort of thing you're looking for. Remember, when you're trading, you're looking to keep it, this logic, simple probability, keep it so you're trading a strong currency against a weak currency. They're the ones to look at, and that's what our traders board shows you on a daily basis as well. So it gives you a bit of a heads up before you even start thinking about the news. Okay, so a couple of questions just come here before I move on from here. So Blessing says, I'm a newbie, I'm doing scalping, I'm still trading small volumes and micro lots. That's very good. I want to get a strategy I can go big with, hopefully retire on a full-time trade. Trading full-time, Blessing, is very, very difficult. Okay, so tread carefully, keep your risk small. It's all about risk management. Let your winners run, keep your losers very small, and you should be okay. I would like to find out which news to stay away from. Some of them are just sudden. This week, Trump about tax, and gold just reversed and the dollar gained strength. It was all too sudden. Malaysia, well, that is what's happening at the moment, and I'll talk about that more about that later as well. So let's just concentrate on the actual news that we know is coming out. So what do we do? How do we trade that? Well, use the economic calendar. We have one on our website. There's many websites have them, trading websites. There's different types of economic calendars, but have a look at it, and it allows you to plan your trades and plan your day and plan your week. So here, for instance, these are the high impact events, the red excuse me, the red events. And again, they're there in the book. They're actually planned a year in advance. at least a month in advance. They're published up on these websites. But you know, the United States government, the British government, the European governments, they all plan when these announcements are going to take place, and they're at least a year in advance. So you could plan your year if you wanted to. But here we see them at least a month in advance, and they're not only, they include things like just economic data. So this first one here was consumer prices. So that's the inflation for the UK year on year. The data for January came out at 9:30 GMT, and we'll talk about these in a minute as well. So there's also political comments and events that can be stuck on here, and also speeches by people that can move the market. So if Mrs. Yellen's having a speech like she is today, or Mr. Carney in the UK has got something, has got a planned speech, be aware of it and plan your trades accordingly. Okay. So this is our economic calendar. These are the high impact events that are left for, well, this was today and the rest of the week. Okay, so we got some significant high impact events for particular currencies for the rest of the week as well. Okay, so planning should be part of your trade plan. Or many people say to me, oh, well, there aren't enough high impact events. Well, how do I look at what about the next step down? So if you look at the amber events, there might be, this is where it all can get a bit confusing. This is the same week with the lower impact events, the next step down, the amber events, and you can see I've only got 2 days on here, 2.5 days on here, because there's so many events. So if you were trying to plan all of these events or trade all around these events, you'd think, well, how is that's going to affect everything? If I can't avoid all these events, or do I look, all of these are coming out at 1:30, which are the most important ones? Well, it's saying that these ones are, but gosh, one of these could be good, one of these could be bad, it could be, oh my word, that's how I get confused. On these ones, they're really late for me. So do I need to be aware that I'm trading the Japanese yen, I've got positions open? And this is why you need to be aware of the impact of the news. And so do you actually trade it, or do you just accept that it comes out and it just is part of your trading plan? That's what technicians would say. Others that try to trade the news events themselves plan to trade them around it, or some people are happy to trade the actual event itself. Others wait, get out beforehand and get in afterwards, either an hour before, 30 minutes before, or at the end of the day, after the event's been absorbed and predicted. And again, we'll see all these as we move forward. So the red events, they might only give you 1, 2, 3, 4, 5, 6, 7, 8, 9, only 10 events in the week. That might not be enough for anybody just trading the high impact events. So they might want to trade more of them, but it can become overwhelming. So when you're looking at the news, how much of it is important? Much of it is already priced in or anticipated. So the key thing is to look at the previous, these columns here. So what happened last time, what the consensus is, what the experts are expecting this time, and then what actually happens and what's the impact of it. So here you can see quite clearly here today for Britain and for the Eurozone, the numbers are in red, so they've missed what the consensus expectations were. So you would expect that the premise is that if the actual figure is worse than the expected figure, the simple logic says that should be negative for the Great British Pound. Okay, which this actually event was this morning. It went down below 125 again. The British Pound, the cable rate went down. However, in real terms, in the longer term trend, the previous was 1.6, and this month it's gone up to 1.8. So the trend remains. So it's actually better than it was last time. It just wasn't as good as people were expecting. So the trick sometimes is the significance difference between what was expected and the actual. If the actual is significantly different to what's expected, i.e. significantly better, then that's a potential trading opportunity after the news has come out. If it was significantly less than 1.9, then that could be a selling opportunity. And what happened with the pound was that's not significant enough a miss for the pound to keep going down, because it's still better than previously. So what probably happened was initially this came out, the price probably went down, and we'll have a look in a minute, see what happened with that one, and the price may have recovered from that. And then we've got a similar event here. This might be more of an impact because GDP figure for euro here, concept previous was 1.8, expectations was it to remain, i.e. not go up, but it missed, but it only missed a little bit, so that was probably quite negative for the euro at the time, but it may have come back, but it's actually less than previous as well. That's the other thing. Okay, and same with here, same with this one. So this one's come out at the same time, the quarter-on-quarter figure as well as the year-on-year figure. So you put those two together, and that's generally quite sort of negative for the euro when you put them both together. And then tomorrow there could be some announcement out of this meet, so it could add some more pressure to euro. So, and then later on in the week there's a report on Thursday, so again that could be interesting for trading the euro. So it's really all about the event itself and trading around the event sometimes, or trading the event itself if your risk management's tight and you're in a position to do that. Okay, so in my view, and generally this is the market's perception of it, let's take a step back about what is the big news. So let's assume we're going to only look at the red events, and even the red events have their hierarchy, okay, and they're in this order. Some of them, some people have them in different. Some of the lower ones. Sometimes 4 and 5 are mixed up, or 6 is swapped with 5 and 4 swapped with 6. But this is how I interpret, and this is what I use for if I'm trading the news or looking at the news events. By far the most important is the interest rate decision by central banks. And now, since the crisis of 2008, when presumably most of you here have been trading since 2008, the central banks have been dominating the discussions and when and will they or won't they increase or decrease their central bank interest rate. So that's by far the most significant event. So that should be the first one you want to look at, and that's what we do look at from time to time as they come out from quarter to quarter. So the next one, for instance, there is this anticipation: will the Fed, the Central Bank of America, will they look to move interest rates up in March? So that's the big high anticipation, and Mrs. Yellen's speech today may give some indication to that. The general feeling is that the news from the NFP results this month suggests that they won't be looking to move in March, but the market is still anticipating at least 2 or 3 times this year the Fed will increase interest rates. The issue is when this may happen. Okay, so look, as you just the question here, if the consensus is greater than previous, does that mean you expect to take a sell position for a pound currency pair, for example, Lugusani? Let me just go back to that. Lugusani, can I just finish these top 6 here, and we'll go back to that, and I'll explain that in a minute. Okay, so next one is GDP, gross domestic product. So that's all about how well a country's doing or an area's doing. So GDP growth, that's one to look at. CPI, consumer price index. This is all about prices and inflation, whether it's going up or going down. This is number 3 for me. Jobs news, and I've put here employment and unemployment. Everybody knows about the non-farm payroll if you've been trading for any length of time. But it generates a lot of volatility, a lot of interest every month, because it's key to the fundamental nature of the American economy. And the American economy is the biggest economy in the world. The dollar is the most significant currency in the world, so we all need to be aware of it, and that's why it's gained so much significance. But in my view, sometimes it's overplayed, the actual NFP number, There's lots of other data come out at the same time, and it was a classic example this month when it beat and then the dollar actually went down. So the logic didn't work there, and there was other reasons for that. So employment and unemployment. So there's a mixture of news there. Retail sales figures. Why is retail sales important? Because the consumer in the the developed markets, the key 8 currencies, the key the countries we're talking about, the consumer is buying. How confident they are, and that's number 6 here, consumer confidence. But the retail sales, what's selling? Things like computers, houses, hardware. Housing figures as well. I haven't actually got housing data on here, but retail sales is bars of cars and high value products. So retail sales figures are very important as well, and also then consumer and business confidence as well. There could be some other things. As I say, other things on here about like housing is sometimes added as a number 7 on here. But each of the key currencies that we talk about, so the pound, the dollar, the Japanese yen, each of those countries have data, high impact data released usually about some of these, if not all of these. So each major country has at least 7 or 8 of these key events each month. So for fundamental traders or news traders, they still have 40 to 50 opportunities of high volatility potential events each month. And so if you're only trading 20 to 22 working days each month, there's plenty of opportunities even if you just trade the high impact events. Okay, so don't go trying to chase every single piece of news because it can drive you mad, trying to understand everything as well. So say focus on the high impact events. If you are a scalper or an intraday trader closing your trades before you go home for night closure, but you must know when these high impact events are happening or not happening in some cases. Like on Mondays, sometimes there's very little high impact events on a Monday. Many swing traders, people that are holding positions over a few days, they will often close their open positions. They will square off their positions 30 minutes before a major event, and then look to re-enter the position usually about 30 minutes after the event has happened. Okay, if the trade is still valid, if the position is still valid. So if you were trading a trend and the high impact news event suddenly changed the trend in the 30 minutes or then after the event, then you wouldn't re-enter that position. Okay. Trading the actual event and the announcement can be extremely volatile and extremely risky. What I've written here is it's different but similar. It's best to try and trade the expectations of the event and then the reaction to the event, because what you will see time and time again is if, for instance, let's use NFP. Everybody knows NFP, and there's very high volatility once a month. So if the expectations for are X amount of jobs and the run up during the week is that the number's going to be better than expected, the dollar will tend to rise, or US marks will tend to rise. Okay, so that's the expectations. If then the number comes out and it misses, the reaction is compounded because the expectations of it have been for it to beat, and the actual number is worse. So the fact it was worse and expectations were even higher than that makes the move usually more volatile and more of aggressive move down. So, and the reaction. So try to trade sometimes the expectations of a high impact event and the reaction to the event rather than the number itself. I hope that makes sense. But let me say it again. Trading the actual event can be highly volatile and highly risky. It's best to try and trade the expectations, the prior sometimes running up to the event, or the reaction to the event. And as I say, many people will be closed. The expectations means that sometimes many people that will be closing their trades and squaring them off before the event. So you might see that movement that way around as well. So let me just go back to Lugasani's question about previous and consensus and previous. So it was about pound, wasn't it? So you've said if the consensus is greater than the previous, does that mean you will expect to take a sell position in the GDP currency pair, for example? Not necessarily, because if so here the previous, let's have a look. So this one, and this is what's actually happened with the pound. The inflation was expected to be better by 0.3% this month than last month. So that's been relatively good for the pound, because it means that people are starting to buy. The impact of the low pound is causing inflation to rise, and that's what's going to happen. So because it missed expectations, the pound would go down, but it didn't miss expectations by very much, and it's still going up. So the trend is still positive. Okay, so as I said, we'll bring that in as an example. I hope that's answered your question, Lugasani. About consensus consensus and the actual number. Okay, and all the economic calendars will tend to have them in red if they've missed, or green if they're better, but the actual significance of it, you need to make a decision how much. Just because it's missed, is that a significant difference? For me, that wasn't. The European data was a wee bit different, because we had two bits of information, both for the quarterly and for the yearly. So that's different. Can we look at the USD tomorrow as an example? Yes, yeah, well, absolutely. We'll look at some charts as well. I'm not sure what time it is. How long I've been talking for already? Half an hour. Okay, so let's crack on. There's not much, a few more. So there were the 6 events. So you need to be aware of those, and you could add something about housing stats in there as well, because that's a big impact as well. But these are the key 6 high impact events, and each currency and each country announces these during the month. So there's many trading opportunities if you just want to trade the fundamentals, you just want to trade the big news. So as I say, focus on the high impact events. Intraday traders, you need to really know that. Swing traders often get out, and if you're going to trade the event itself, have a look at trading the expectations of what might happen, and then the reaction to what might happen afterwards. So the problem is, news isn't logical. The markets are not logical. So whatever your experience is, and whatever you've been trained to do, whether you're a doctor, you're an accountant, you're an engineer, trading isn't like that. Trading has its rules, but the logic sometimes goes out of the window, and that's sometimes why people just concentrate on looking at the charts, because it's all the price, the reaction, the news, it's all in the charts. And so the charts will tell you everything. That's one very, very narrow view of it, but that's what many people say. So this last comment here, I'm going to go to the central bank. Sometimes the central bank comes out with this announcement saying, well, we're going to move interest rates by 0.1 basis points. That could have one impact, but quite often what happens is that the Mr. Draghi or Mr. Carney or Mrs. Yellen will then have a press conference 45 minutes later, typically, or half an hour later, and that can, what they say in their pre-prepared statement, or what they say in answer to the questions that the press have with them, can sometimes either contradict or compound the announcement itself. So that's why you get these high volatility movements when Mrs. Yellen's actually stood there actually talking, because she sometimes the phrases she uses or the words she doesn't use can have just as big an impact as the actual announcement of the number itself. So as I say all the time, markets are still driven by people and emotions. Yes, the algos are taking over and the computers are taking over, but the markets still have these basic fundamentals of fear and greed, and that is an emotional human instinct, not a computer. The problem with the algos is they just sometimes just look at the numbers and they can't interpret the sometimes the tone of Mrs. Yellen's voice, or the tone of Mr. Carney's voice when he's saying something, when he's looking at the journalist in the eye. Algos can't do that. People can interpret that sort of thing, and that's why we still get this sort of volatility, and that's why markets are still driven by people, and will be for many years to come, I think, as well. Great question. Somebody's just put a question here, Takas Denser. 2 sets of data, one positive, the other one negative, all big high impact. How would you predict the market movement? Well, Takas Denser, you don't want to that's the point. You don't want to predict the market movement. You want to wait till the market has moved and then either join that movement or stay out of that movement. The question is how long to stay out. So if, for instance, if we had 2 high impact events affecting the same currency, one was positive, one was negative, they should cancel each other out. That would be the logic, wouldn't it? But again, it depends on the significance of the 2 high impact events, if one was more significant than another, or if one missed more by the other. So you would tend to, if one beat expectations much more than the other one missed expectations, it should be, logic would say it would be positive. Okay, but again, as I've just said, the markets aren't logical. It's all about understanding how the charts react. So sometimes these hugely volatile events, you need some time to let it calm down and react afterwards. So quite often with news as well, it's often always absorbed, or it's already been, the street is, the word on the street, or leaks have come out, on the wires you hear all the time as well. So it doesn't have the impact you might anticipate it would. Or if it's in line with expectations, don't trade it, because it's already priced in. If something comes in exactly what the market was expecting, there's no point, because that's already priced in. It's not going to keep going sometimes. And also this idea about the markets not being logical, do not always assume 1 + 1 = 2, because when you're trading in markets, it doesn't always be the case, and that's sometimes the case when you're trading news as well. As I've said, just because something should be positive for a currency, because something's better than expected, it was green on the economic calendar, but the currency's gone the opposite direction. That's just what it does. Remember, one of the most important things is the market is always right. The market is always correct, because that's what the price is. Just because you think that NFP figure was fantastic and I've bought the US dollar and it should be rocketing now, and it's not, it's going in the wrong direction, the market's wrong. The market isn't wrong. The market is right. Just because the logic says it should go in one direction, more often, well, not more often, but quite often it doesn't, and you've just got to accept that, because that's part of trading. Don't try and, as I've written on here, don't try and figure it all out, because it will drive you mad. There's lots and lots of news all the time, lots and lots of gossip all the time. So if you're going to look at the news, focus on the big bits and try and take a step back from it. How big was that piece of news? How important was it? Is this movement, is it going to continue the trend? Is it going to change the trend? Is it going to mean we're going to start a trend? Was it big enough? And as I say all the time, trade what you see, not what you think. The explanation may come out much later, or may never come out. It might be just one of those things. And I've got a few examples here. Last Friday, the NFP figure, it was of 200 and I can't remember the actual number now. I should have looked it up properly. But it was 220,000, wasn't it, or something? It was much, much bigger than expected. Expectations were only 175,000. So what happened? Well, the dollar spiked up as the headline number came out, but then it fell very quickly, and it closed the day, and it closed that week, Friday, much, much lower. And that was because the earnings figure was missed. So it wasn't, the headline was great, but the earnings, the wages growth wasn't very good. The participation rate was okay, but it was the earnings that had pulled it down. So the headline was great, high impact event, 200,000+ jobs again in the US economy, but the logic went the other way. Last week, cable, pound USD, all of a sudden, I might try and bring the chart with a minute if we've still got some time at the end. It fell completely on, what looked like no news event. It fell very aggressively for about an hour and a half to 2 hours, and then all of a sudden it bounced along this bottom at 123.50 for a few hours again, and then by the close of the day it actually reversed and moved 200 pips back in the opposite direction. No clear explanation. Why did it do that? There was no news announcement. There was nothing going on. It just did what it did. So trying to work out that logically, why has that happened? What's happened? It just happened. There probably will be some reasons for it, and it might be, my view is that third point there, the fourth point there might be some mergers and acquisitions going on. So if an American company wants to buy a British company, they've got to pay British pounds for it. So they need to sell their dollars and buy pounds to purchase the British company. So sometimes that's the sort of thing that causes it to happen. The euro British pound, that's another one as well. At the end of each month, you'll see the very strange volatility in that pair, or increased volatility in a pair that doesn't normally move very much. And that tends to be because the UK many years ago negotiated a rebate. So the UK pays in lots of money into the EU, but they get some of it back as a rebate. It's a crazy way the EU works, but anyway, that's what happens. And so the EU, they've got their euros, but they've got to pay the Brits back in sterling. So they've got to sell their euros, buy some pounds to give it back to the Brits, and literally, that's what happens. And you can see it happening at the end of last day or last 2 days of the trading month. That happens. So news can be crazy, news can drive you mad, but concentrate on the big events, and you can see sometimes anticipation of the news before the event, and then the reaction to the news after the event. But the key thing is being having good risk management and being aware of how these news events can not always go as you might anticipate them to go. Tanfez, I can't see the rest of your question. I've just got when I close a trade after entering in profit. I don't know what the rest of that question is. So if you want to type it in again, I'll have a look at it. Okay. So have we got any questions? I'll bring up some. Let's see if we've got. What time is it? So we got 10 minutes. If anybody wants to stay, I'm happy to bring up some. Oh, Tanfez has gone offline. I'm happy to bring up some charts and we can have a look at that. See if we can find that cable one I was talking about. See what the pound did this morning when we did that. So is everybody okay with doing that? Yep, last 10 minutes. Okay, so let's have a look at some charts. So what's this one? Let's bring it on to the hour. So here we are. I didn't know this had gone on, but I haven't looked at my charts this morning particularly. So here we are. So where did that British? Where do you think the British news came out? Oh, that it missed its inflation target. It's quite clearly at here, wasn't it? So it's had quite a big impact. So see what I was saying about the sometimes trade the expectation. So here, this is the 1 hour chart for the cable. This is pound against the USD. So all from yesterday, this is going back to yesterday afternoon, the pound's been sort of generally in the upper half of the Bollinger Band. The parabolic SARs have supported it going up. It's went up, it dipped a little bit. The blue line here is the 10 period exponential moving average, so that's held ever since 3 o'clock yesterday. It sort of reached this top, which we didn't know at the time. So 8 o'clock here, is it 8 o'clock? Let's have a look. So it's drifted up overnight. Yeah, this is 8 o'clock here. So the London desk's open. It still looks quite positive. Rumours might have started circulating that it wasn't gonna hit. Who knows? Lots of volatility the hour before 10 o'clock when the euro news came out, but the actual inflation figure missed, and it's moved quite aggressively right back down through 21, much more than I thought it might have done actually. So it's obviously that inflation miss, because we're back through. Where's 25? 25's here, back through that psychological 25. big miss. So inflation is a significant event. So I was wrong there. I was expecting it to have perhaps reacted. But having said that, remember, following any of my analysis, I've been short. This one's been out of the money for a while. I've been short cable from this point here. I think that's our entry point here. So that trade's actually back in the money from being out of the money for all of this time. So there you go. So big move down, high impact event having a very, very high impact. So it's happened. The hour afterwards it went even lower. Look how much lower it went. It went all the way down to 124, whatever it was, bottom of that wick. And the trend is still down. So those guys that were long here might have closed out here and lots of entered here and got short. So what would you do now if you were still, so if you're a day trader on the hour chart, would you still buy? Would you then re-enter this as a buy from what you can see? What do you think? Any comments from anybody? James, I'll get to your New Zealand question in a minute. I haven't ignored you. Yeah, so clearly a lot of people have got in and just left that, or added to their, or turned it into a short position if they're a 1 hour trade. Obviously, if we look up at the 4 hour, what would the 4 hour traders be doing? Well, again, it's broken. It's been going sideways. Look at the Bollinger Bands are going sideways here. That's a bit freaky, isn't it? Look at that one there. It's narrowed quite aggressively. It's not really helping us on the 4 hour. Big down. So it's at the bottom. So it's a bit more weakness on the 4 hour. And the daily, which was where we took our trade, it's peaked up. So it needs to break down really. From the daily point of view, it really needs to break these 124.50 levels for it to keep going down, because it's been in a very much a sideways movement for the last few days. So these high impact events, but sorry, they look quite dramatic on the shorter time frames, but you can't really see how big an impact on the daily candle there, can you? That inflation news has had, because the candle today at the moment, I know it's not complete and it's the daily one, looks very, very similar to the candle yesterday, and there wasn't any particular news yesterday out of UK or even on Friday. So that's the impact of your time frames. Okay. James has asked about New Zealand dollar, so let me just have a look at that as well while we're here before we close up. So say that's the news. Actually, let me see if I can. No, we can't. It's the daily one. I can't remember. I was going to show you that day last week when the cable rate went down 150 pips and then back up 200 pips on the same day. But I can't find it. Let me look at somebody's asked about New Zealand, so it's not actually on this chart. Excuse me. Profile. So, James, was it this one? What were you asking about? Sorry, you sold. What do you think of New Zealand dollar? I think it's overpriced. Sold it against New Zealand dollar. I think the government statement, latest statement. Yes, absolutely. The government and the central bank, James, are both saying that they don't want the New Zealand dollar to go down. And as you see, they said it, I think it was this time last week. But if we look at the weekly chart, you can see why. It's been in a steady little uptrend for weeks and months in effect. Okay, this is going back too far, but certainly going back the last 3 or 4 years, this is going back to. Sorry, let me just put that cursor on so you can see what I'm talking about. This goes back to 2015. The New Zealand dollar has generally been strengthening against the US dollar. So the central bank there, remember, they have the highest interest rates of all the developed the major 8. So lots of people like to have money in New Zealand dollars because they give 1.7%, 1.75%, I suppose, some negative interest rates in Switzerland and Eurozone, and virtually zero in the UK. So it's a key currency. So yes, it's a bit over. They want it to go down, and they've had the desired effect over the last few days. Technically, I think we're short. Are we short? Yes, I'm short this one from here. This one's actually in the money, and my target's down here. I can't remember when we posted that, but it's obviously here on the daily here, the 50 period, the red line here is acting some sort of support. We've broken the key 20 period, so that's, that will generally be looking, more people will be looking to get short on that position as the New Zealand dollar weakens, and we've just seen some more pickup in the so that's looking actually quite good in the last few days. I haven't actually looked at this recently, but big move down there, and that's very weak. For some reason my chart's not, I don't think that's up to date, is it? Oh, it must be. Okay, so that's New Zealand dollar. I hope that's explained your question. James Senzo's asked about euro pound. I'll have a look at that briefly because my time's nearly up, and I need to go and get a cup of tea because I'm getting very hoarse. So euro pound here. What time frame are you interested in, Senzo? Or would you just like me to have a think about? Well, look at that. What a great morning that's had. Euro strengthening, pound weakening, the weaker inflation figure. Euro's spiked up very aggressively there from this floor, having fallen. Look at this hourly chart. Look at that. What a nice little waterfall. Those of you that follow Blue Skies, Jay and Josh, look at that little fall down there. What a fall we've had last day or so. But all taken out in 2 hours this morning. All that movement over all those days, all those hours, suddenly taken out very quickly in the 2 hour movement. So we're back up to this 85, and the 1 hour chart here broken out of the Bollinger Bands, broken through the 20 and 50, and probably will get resistance here. So if you're trading that one on the short time frame, the resistance is here at 85.30 sort of level, 85.31, around this congestion level here from previous days. And then the next level would be this tweezer top here, very nice tweezer top here on the 1 hour chart that's came to pass, and that went all the way down. Nice strong floor here as well on the hour chart. What's the 4 hour telling us? Oh yeah, 4 hours about to hit this congestion level as well, 85.30. So 85.30, any of you euro pound traders out there, it's all around here. Daily chart, there you go. Say high time frame, doesn't look that significant, does it anymore? 85, 56 the bottom. Again, resistance. It's, oh, look at that, 85. That's really interesting. 85.32. That's a really strong resistance level then. So break above this, we could be lots of congestion here. So that is looking quite an interesting one. Not obviously that's very close to that. There's not much for that to move still. It's the risk reward. I haven't had 1, 2, 3, 4 hours strongly up. That might roll over again. But anyway, it's all about time frames and your risk rewards. So thank you for your time today. Blessings just asked, what's my take on gold? Look at it on 50-minute, 30-minute charts when I trade. How do news events affect gold? Gold is very fundamental, Blessing. It's one of those commodities that doesn't yield anything. So technically, it should go down when the dollar's going up because you just pay more to keep your pieces of gold. But in all this uncertain world we're living in, people like to have assets they can hold. So gold tends to accrue when we have uncertain times, and we certainly got uncertain times here. And I can't see the gold chart. I said the euro was going to be the last one, but let me just have a look at this for Blessing. So it's a tightened up chart for this one. I can't, for some reason let me just take that to the day. So it's had a good upper on gold. It may have topped out at this 146 level. It's rolled over on the 200. It's got a strong resistance at this, where it is now, this 2030 level, but it could quite easily as well move back to this 2050, 2060 level as well. It's looking certainly quite strong there in this daily chart since December. Up move. Down at the intraday level, Scale's gone all to pot. Okay, blessings. I'll look at this afterwards, okay, and send you, because my chart's looking a bit of a mess, and I'm running out of steam for today, and we're running out of time. Okay, so thank you. Thank you for your time. Our next webinars is Thursday. I know a lot of you are scalpers and like looking at some scalping approaches. Kay, I think it's Kay rather than Josh, will be talking about some their scalping strategies. Their webinar, their recording is on our webinar list, so if you can't make it on Thursday, he talks about the same thing, same approach. Next Tuesday, I'm going to be looking at fractals, what they are, what they mean, how to apply them. Again, many people put them on and then take them off straight away because it's like they don't really understand them. But it's quite a fractals themselves. Many indicators are actual fractal in nature, but the actual fractal indicator we'll talk about next Tuesday. Then next Thursday, there's the part 2 of the Ichimoku webinar. And then we got some live analysis at the end of the month. Okay, so thank you very much for your time. If there's any questions before we finish, put them in the question box now and I'll try and answer them. If not, email me at webinars@hotforex.com, and we'll see you again next week. So, final questions? Yep, thanks for that, Blessing. I will email you and I'll show you have a look at my. I do talk about gold occasionally. I'll say we had that trade this morning, which went wrong because I didn't look at the 15-minute chart principally. But there you go. We all make mistakes all the time. If you haven't used our app, I strongly recommend you have a look at it. It's a great little thing. Prices, analysis, news. It's all on there. First thing I look at in the morning. My books. Again, a lot of you have seen this before, so. James asking, can we have a open discussion live on fundamentals another day? James, certainly. If you want to contact me on Skype or email me your details, we can certainly talk about that. I've got some time to talk about people that want to talk about fundamentals. Of course I can, absolutely. But these are some of the books I've got lots of books, but these are some of the better ones I would recommend. If you're new to trading, I always talk about Anna Cooling's Forex for Beginners, a recent book from a few years ago. Very good introduction. But if you like, the fundamentals of trading or the mindset of trading, this is the key one. The Reminiscence of a Stock Operator. It's sat here on my desk. A very bad copy of it, but it's sat here on my desk in front of me here. It's an old book, but nothing's changed in the markets. So, thank you for your time. If there's no more questions, we'll close this now, and we'll see you again on Thursday, and I'll see you again on Tuesday. Okay? Take care, everybody. Thank you very much. Bye bye.